Now, you say that investors need to fade their feelings, follow a process, preferably the Hedgeye process, be disciplined, and execute. But what do you think are some of the worst habits that investors have that are the hardest to shake?
They're behavioral. They chase. I mean, people have FOMO. And they freak out low. I mean, their amygdala takes control on the downside. So they're constantly selling low and chasing high. I mean, that's basically the long and short of it. So what you want to do, and again, it's perfectly human. I mean, there have been plenty of Nobel Prizes now that have been won, even in the economics field, which is a tough one for me to acknowledge a lot of these academics and their so-called credentials. But on the behavioral side, particularly when you think about Tversky or Kahneman, or anything that they initially put forth in winning those initial behavioral Nobel Prizes. I mean, it just reminds you that you're human and you need to be not that when making decisions. And if you can make it mathematical and algorithmic and you can fade your feelings, you're going to be well ahead of the crowd and you're going to do a lot better than the crowd.
Okay, let's get to your process. And you joke sometimes that you're a degenerate trader and you trade as many as 75 times a day. But I want to pinpoint that last 5 seconds or 10 seconds before you hit the button. Hypothetically, is it say company X is bullish trading trend, it's at the low end of your risk range, volatility is fairly benign, and you hit the button and that's it? Or is there more that goes into your mental checklist before you make a trade?
The preparation, it's very similar to anything where you want to do something at the highest level. There's a lot of preparation. There's a lot of preparation in that process. So if you want to compare it to a chef, which I've never done, so let me try it. I prepare the ingredients for me are what are those tickers that are going to go into that go into the algorithmic answering of that question, which you definitely just nailed. Again, is it at the low end of the range? Is it bullish trend? Do we like it? From a research perspective, that goes back to what ingredients have I chosen. So I spent a lot of time in particular, which now we've made obviously accessible for everyone on the call, which is our morning meeting, really trying to curate those ingredients, or what are the tickers that Brian McGough wants people to buy or sell. Then I run it through the machine. And if the machine agrees with Brian, then that will pass the test and that will shorten the list. So again, when you start to prepare, that's one thing. You curate and you narrow and you focus during the trading day, because really in the trading day, and I do trade a lot because I have a lot of research ideas. I mean, I have a go anywhere strategy that has any asset class in it, including the crypto crash, which is great. There's a lot of things to short there. And I have 40 plus and growing people on my research team that are constantly feeding me long and short ideas. So I have a lot to do, so I execute a lot. And I don't think you could do that if you didn't have kind of the resources that I'm fortunate to have in terms of both my team and how they all work together.
In the early look today, Keith, you listed your top 3 longs and your top 10 shorts. So I'm curious, in your personal account, or the Mucker family office, as you call it, you mentioned Microsoft, and you were long that last year. Is that something that you'll hold on to long term, even if we're in quad 4, or do you dump it and wait for better conditions?
Well, in Microsoft's case, I sold it and then I shorted it, so that's an easy one. But again, Microsoft, it's just playbook, it's process. Microsoft, for those of you that haven't heard me before, last year we were bullish on everything that we're bearish on now, because it's the opposite in terms of the quad. So the opposite of quad 4 or a disaster or train wreck, whatever you want to call it for markets, is quad 2. Quad 2 is rainbows and puppy dogs and crypto to the moon. And I was long Microsoft. I can only buy Mark stocks in my PA or in my long short book, or in, like you said, the Mucker family office, which is the long only accounts, my kids' accounts and retirement accounts, et cetera. I can only buy something if it's a stock if my analyst doesn't cover it. We impose those rules on ourselves because I think it's a cleaner way to have quite literally zero conflicts of interest. Because you can imagine, if I'm trading in and around stocks where our analysts are talking about them and moving stocks with their opinions, that just wouldn't fly. I don't think it certainly wouldn't pass the test that I want to be held to account on. But yeah, when you think about positions, it'll vary. Obviously, in the long short book that I run, which is my main book, what I did in the early look today was they're not really. I kind of joke about them because they're not really ideas. They're pieces of inventory, right? So when I run my own money, don't forget that I have no model on the company because my analyst doesn't model. So when I bought, if I'm long like Hormel Foods, which I called out this morning, It's a piece of inventory that fits in my portfolio against my shorts. I don't even know if it's a good idea. It just has good attributes, right? It's got the right factor exposures. It's in the right sector style. It's got the right beta. So that's how you run money in the modern era. I know most people that watch CNBC wouldn't have a clue on any of the last 30 to 60 seconds of what I just said. But the entire talk about the industry having evolved, but CNBC still being 20 years ago or 25 years ago. Everyone that runs money with any sophistication and or success being a real important part of that, generating alpha, understands absolutely what I'm talking about when I'm running my long short book the way that real pros run it.